Very good afternoon to all the viewers. We are going to talk today on the... Ravi and me are going to speak on the role of professionals in GST audit. You know that the time is coming up and many of the companies would like to complete their compliances by August or latest by September. With this, we will move on to what is the coverage for the day. Today we look at why professionals were chosen, what are the services which are expected to the stakeholders, the opportunity which we have got for this audit under 9C is something which comes with a responsibility, and what extent we need to cover where there is a lot of confusion on whether we can just do the reconciliations or we need to look at compliances also. And specifically, we will touch on some aspects of reporting and certification. Normally, the advisory on this probably could take up to 3 hours, but we will try and summarize it within 30 minutes today. So the first question is why professionals were chosen, and we will look at why we were chosen. The main reason is that under tax audit, when in income tax, when these compulsory mandatory audits were there, the revenue got boosted due to errors which were rectified. Remember, errors need not be frauds. They can just be genuine errors, and all those errors got rectified. Wherever possible, the additional taxes were paid at the end of the audit during the course of the audit, and automatically the income tax collections went up. Taking this example, this audit also, GST audit also has been provided to us. Remember, this is a new law and therefore there is a lack of awareness. And therefore, the auditor in the initial stages of 3-4 years possibly is required to spread the awareness. What are the provisions which are there? What are the compliances which need to be done? Because the indirect tax law is basically a procedural oriented law. Also, self-assessment has been something which is the hallmark of the effort made by the government, that they will trust the SSEs. Unfortunately, there are a large number of SSEs who are not complying with the law, and also maybe 20% who are tax evaders. That means knowing that tax is payable, they won't pay, or they will not comply by not filing the returns. One more point which is very important is that the amount of interference in the business by the tax officers in the form of surveys, etc., is also sought to be reduced in GST. Basically, the unethical or errant officers were and are quite a lot, and to reduce the bribes in the market, this is one of the ways in which it would ensure that government gets its just taxes without having to follow up with the SSCs too much. As far as chartered accountants, cost accountants are concerned, we are needing to follow technical standards. We should have a knowledge of the GST audit and as well as business. Both the people who have been allowed to sign also subjected to oversight by regulators, the Institute of Chartered Accountants or the Institute of Cost and Management Institute, which is also called ICAI now, but both are subjected to the oversight. In addition, there is also there is NACAS, which is also there. So this responsibility which we have got, or the opportunity which we have got, comes with certain duties, and the duties would be that we increase the awareness of the subject. Advantage of compliance we stress, so that the client or the SSC is not subjected to surveys, search, seizures, summons, etc. Also, to avoid conceptual system and transactional errors, these three are three separate heads. And if you buy a good book in GST, you will find that these this can be a value-added activity, and the activity of when it is value-added means that we can go to optimize the tax cost, see that they take the optimum input tax credit. Over a period of time, it's expected that these audits will build trust on both sides, while the government will get additional revenues. Certainly, it is going to reduce the cost of compliance for the administrators or the tax collectors, that is CBIC. One very important aspect is that we are in a global trade, and encouraging the foreign direct investments is important. Now we have a wonderful opportunity while companies are shifting from China to India, especially the manufacturing side of it, where we could become we could also get a much higher part of that manufacturing, whether it is auto or pharma or anything like that. So along with the duties, we also should ensure that compliances are there, and good climate for foreign investments is ensured. We are already doing audits, and when we are doing concurrent audits at regular intervals, the client is most advantaged, in the sense that as and when any error is found, it can be rectified. The cost of interest and the future dispute resolution can be avoided. The need to also advise the clients and confirm their understandings also could be there as a very big advantage to GST. I need to share that the mandatory audit under 35(5) is hardly 10% of the facility of the total services which are there. Possibly a review audit is a very important product which adds value to the client, and they would be interested in us doing it because we become a profit center rather than a cost center. In our internal audits which we are doing, we can also ensure that GST is covered. Remember, for a normal SSE, the GST from the inward and outward, that is the outward tax and the inward tax, where we take credit, could amount to almost 30%. And pay the correct tax, even if it is higher, I would avoid the disputes and ensure that the maximum ITC is taken. This comes with one important aspect, that we need to be independent and report fearlessly. Even if we are going to lose the audit, we need not, bow or bend. Standards are there, checklists are there, which are available for all audits, as you all know. And the other point which I thought I should sensitize is that to get the work, we need not quote lower fees. There's enough work in the market, and depending on the time and effort involved, we should quote properly. And once we have quoted and accepted, then we need not compromise the verification, because we accept agreed to. Therefore, no compromise on the extent of verification, because once you start the verification, test checks have to be increased. All this we need to do. We have to ensure that we understand the business. Otherwise, what happens in many audits I have seen is that if we have not understood the business and all the streams, then we may make some mistakes in assuming that the client is correct. Remember, this is a new law, especially in matters of classification and whether it is a supply at all. What are the top level items which do not come in the balance sheet, but on which GST has to be paid. These things we need to understand. And for understanding that, we have to understand the business thoroughly. The internal controls which are in place in the organization may be very good, but we need to confirm that it is there for GST transactions also. Very, very important that we focus on the GST transactions. This will ensure that the GST also gets controlled, and we see that the authorization limits which are there for cash or for purchase are also there for GST, so that any decision should be taken after due consideration and consultation. As far as the extent of audit is concerned, which is a very important aspect of GST, whether we should only reconcile as per returns to the audited financials what the client gives, I think that may not be the proper way at all. Otherwise, why should they give it to us? It's already available with them in the portal. They want us to examine the internal controls, validate the books, see that those transactions which are not recorded in the books because they are not financial transactions. For example, transactions where you deal with related parties, the reverse charge mechanism, the point that when I deal with my branches outside the state, I need to pay GST. We have to also confirm that the levy is there. If there is no supply, then we need not pay GST. So there will be a difference in the books and the GST requirement. Where there is a deemed supply, I need to pay the tax, though it will not be recorded in the books. We have to ensure proper classification and claim of exemption. Very, very important aspect. And many of the clients may get show cause notice after 4 or 5 years, where their business will be in difficulty. They may even have to close their business because of the lack of compliance. Valuation, especially between related parties and between the uh, own entity when we transfer any goods or services to them. Place and time of supply has become very important. Time of supply, especially in real estate for contractors, and place of supply for exports, import, intermediaries especially have been put in a disadvantageous position, but they have to comply as of today. Tax credits are huge in GST. For a manufacturer, tax credits could be 80% of his outward GST. For service provider, it could be less. For a trader, it would be very high. Maybe 90% of the credits will be already available. For exporters or inverted duty structure, refund is very important. Cross charge, as I mentioned earlier. So this possibly is something which we need to do in our 9C audits, which are under section 35(5). Whether we should investigate to find out whether bills are represented by goods or services, delivery challans, whether we should link to the e-way bill to the final invoices, fraudulent transaction, over and under invoicing, whether we need to investigate, fake bills, circular trading is something which is happening in a big way in the market. Whether we should ensure that none of the bills are fake, or fake bills which come to us are report, because sometimes what happens, you get a wrong bill in your 2A, and you think that, okay, this is something I might have missed, and just take the credit, you may be in trouble. These type of things, whether we would be expected to see, the answer is possibly not required. So if I were to look, summarize the extent of audit, reconciliation, 100% we need to verify. Today you have tools which can help you to do the reconciliation at the vendor level, and that should be used, and they are not very expensive also. And as far as B is concerned, we should cover it as much as possible. Where we are not able to get that information, or it's not possible, then we need to get a proper management representation. In all the good books, you will also have a list of management representation. Those which are relevant to you, you should choose and ensure that this management representation is signed off before you complete the audit. Investigation, as I said earlier, would not be covered in a normal audit. I'll request Ravi, my partner, to take over from here onwards.
Thank you very much,
Thank you
sir.
very much, sir.
So, as
So,
you rightly
as
pointed
you
out,
rightly pointed out,
the scope of GST audit in terms of role that a chartered accountant has to play, including the responsibilities and the duties that he need to follow while he's signing the GST audit report. A very important and a prominent question that has come always is that what is the depth at which the chartered accountant has to do the audit, which has been in a very summary form explained by Madhukar sir in the previous slide. But I would just like to take it more through the statutory provisions of the act and make it more from the reporting perspective as to in a given situation how a chartered accountant has to react, or how is that a chartered accountant has to actually report. So that will be the focus for another 10 to 15 minutes. So now, when we look at the entire reason why this distinction is coming and why there is a divergent views among professionals, industry and trade as to what is the scope of professional is because of the fact that when we look at section 35 subsection 5, it says that whenever a company or a person is having his aggregate turnover exceeded beyond a particular limit, currently now it is 5 crores, they need to get an accounts audited by a chartered accountant or a cost accountant. Now, at one way, the word is accounts audited. So it means that there is an audit which is required to be done. Now, when we look at the definition of audit, certainly it is extremely wide, which says that audit means the examination of records, returns, and other documents maintained or furnished by a registered person under this act, or the rules made thereunder, or under any other law for the time being in force. Now, this is very, very important that the verification is not merely restricted to the compliances required in respect of GST given in the this act, but also other laws. So that is where the important question comes is where is that a chartered accountant needs to draw the line in terms of the compliance when the meaning of the term audit is so wide. So there is another divergent view which is coming is that the accounts audited must not be linked to the definition of audit, and both are independent, and the role of chartered accountant gets restricted merely to reconciliation. Now that school of thought which has been there among the professionals. So there was a CBIC press release which was released on 3rd of July 2019. Now, if you look at this press release, I would like to focus on that last two lines where it is mentioned that with respect to the reconciliation statement, that is the 9C which is required to be filed, their role means the role of a chartered accountant or cost accountant, is limited to reconciling the values declared in annual return with the audited annual accounts of the taxpayer. Now, let me tell you, this particular press release has created a big time confusion because at one stage you are telling the definition of audit and the accounts audited by 35.5, and there's a press release which is telling that the role is limited to the reconciling values. Now, the question that comes is what is the authenticity of the press release? Let me tell you, this is not a circular, this is only a press release. We have Supreme Court judgment in Ratan Melting Wire stating that the circular which is not in line with the law is not in existence. So as far as press release is concerned, the authenticity is much lesser than the circular, because we are seeing that press release is only on the website, and at times they are removing the press release straight from the website. So there are so many press releases which have been uploaded and they have been removed without any announcement. So what is the authenticity and whether to rely on the act or a press release is again an important question. So now one of the important aspect is that when we look at section 44 subsection 2 of the CGST Act, again, which also talks about actually filing the annual returns and the 9C certification. So this is very, very important because this is where prominently an information comes that the role is beyond even mere reconciliation. So when we look at this section 44 subsection 2, it says that every registered person who is required to get his accounts audited in accordance with the provisions of 35.5 shall furnish electronically the annual return and a copy of audited annual accounts and a reconciliation statement. Now, the word which has been highlighted in bold is very, very important. It says that reconciling the values of supplies declared in the return furnished for a financial year with the audited financial statement and such other particulars as may be prescribed. Now, this is extremely important because it says that such other particulars as may be prescribed. Now, this makes it very clear that what department is looking at in this particular audit that needs to be submitted is, one is the reconciliation details, where one has to reconcile the details with the values and such other particulars as may be prescribed. Now this is very, very important. That is how they have mentioned in the part B of the form what are the other particulars which department requires. So we will now dive into the practicality of the situation as to, in a given point of time, practically how is that an auditor must take a decision, what should be the guiding point, where should draw the line, and how that reporting must happen. Now, when we look at this GST audit, one of the peculiar thing in GST audit is it is a combination of a certification and a reporting. So we cannot say that GST audit is merely a certification or the GST audit is merely a reporting. It is a combination. Now, if you look at the income tax audit, that is more of a certification where it says true and correct. There is nothing a true and fair, because there are certain points on which you need to tell yes, no, whether maintain, not maintain the information and all that part. But when it comes to GST audit, at one stage it asks auditor to sign a particular information giving a true and correct view of the entire information which has been signed. And at the second stage, it also asks a true and fair view. So it is a combination of true and correct and true and fair. Now the part A, which is a reconciliation, that has to be true and correct. So reconciliation, there cannot be an iota of doubt as to whether it is fair or unfair and all that things. See, reconciliation is reconciling the two different sets of data. So that has to ultimately, that loop has to close. It cannot be like there is an opinion which is to be formed on the reconciliation. That is the reason the reconciliation part has to be true and correct. Now, when it comes to a lot of other aspects of the audit, which is whether intermediary, what is the place of supply, what is the classification, rate of tax, and all those other areas, which certainly requires verification, but in the context of auditor reporting that into the best of his judgment, to the best of his opinion, giving a true and fair view of the entire affairs from the GST perspective. So this is one of the important dimensions which needs to be understood, which differentiates GST audit from other audits. Now let us look at practically various scenarios and how is that auditor has to deal with it. Now the entire issues in whatever auditor is going to identify in the course of GST audit can be possibly divided in two different baskets at first level. First could be the issues noted by the auditor which are in the course of reconciliation. And then there can be certain other aspects which are the issues noted by the auditor which are not in the course of reconciliation, possibly classification or any other technical aspects which our auditor has identified. So when it comes to reporting on something which is on a reconciliation part, now what happens is that auditor needs to understand that the reporting, first, whether any issue, whether it is material or is it pervasive to the financial statements. So when we say material means it is a substantial amount of non-compliance. Now materiality is again, I would say, a subjective concept and depends on facts of each case. An auditor takes a judgment whether it is a material or not. For example, in a company of 100 crores, it may be possible that auditor may find that a transaction which is of 10,000, 20,000 rupees, not a material transaction. But again, within the context of what is the ITC that they have taken, auditor decides whether a particular aspect falls within the ambit of materiality or not to be reported. Now, when it comes to pervasiveness, it is something where the accounts are, the reconciliation is so badly disturbed that there is no question of auditor being able to even reconcile. It is not at all in a shape. It is not at all in a position to be commented upon. So that is where we can say that accounts are totally, the financial statements or the reconciliation statements are pervasive. So the non-compliance is huge or tremendous. Now, in case of reconciliation, irrespective of materiality, you need to totally close the loop. So even if the particular non-compliance is non-material, if you see the first part of the table, and it is material, but it is obviously not pervasive. So auditor needs to give this in the table 5 and actually make sure that the assessee make the payment of the taxes. Auditor needs to quantify the amount in that scenario. Now, whether the assessee make the payment of the taxes or not is the choice of the assessee, but the recommendation must clearly go in the 9C. Basically, the auditor needs to quantify the taxation. Now, in the second scenario, where the non-compliance is neither material, it is also not pervasive. So it means it will be a basic amount, maybe some 2,000 rupees of reconciliation difference which is coming or whatsoever, which unreconciled difference which is there. And obviously, since there is no supply transaction or exempt supply, which auditor is unable to close the loop, in that scenario also, since it is a reconciliation difference, accordingly a view must be taken by an auditor whether it is taxable or exempt, and report or give the details in the recommendation in the part 5 of the reconciliation statement itself. So here also auditor needs to quantify, and the option is lying with the assessee whether to pay or not to pay. Now, what is important is the third part, where the non-compliance is such that it is pervasive of the financial statements or the reconciliation statement. Now, there it is not like there is something which is unreconciled. Auditor is not at all able to rely on the data which is given. So in that scenario, auditor cannot sign it as a true and correct. Auditor also cannot call it as a true and fair. Auditor, in fact, has to give an adverse opinion. One very important aspect we need to understand, in the standard format which is given in the part B, they have not given any specific field for adverse opinion. They have only given auditor states with whether in his opinion it is true and fair. So auditor need not sign that. Possibly auditor has to add a particular statement stating that auditor, in an auditor's view, it is not even true and fair, it is adverse. This is very, very important that we need to note the view which auditor has to take. Now, the next set of information comes is in a scenario where the issue is noted which is not in the course of reconciliation. Now, whenever something is noted which is not in the course of reconciliation, one fundamental and important aspect which auditor needs to understand, or which auditor can do in the course of GST audit, is that he need not quantify the amount of taxation, because again, that is where the line has to be drawn. That auditor is not an assessing officer, so auditor need not quantify the rupee level liability and for recommendation. So in these kind of instances, the differentiator is that auditor can simply give his comments in part B that this is the non-compliances, and broad calculations of whatever that an auditor have made can be stated over there. It can be absolute calculations, or it can also be an estimated calculations, can be mentioned in the part B comments. Now it is for the assessee to discharge liability taking note of those comments, or it is for the department to take note of those comments and pursue the matter with the assessee. So here again, if it is material, auditor has to give this comment in the part B, and if it is pervasive, auditor has to mention that it is not at all true and fair, and he has to form an, either he should not sign, or when he's signing he should give an adverse opinion. It cannot also be true and fair. This is very, very important point. So now, when 5 scenarios which I have developed to briefly explain you as to how a decision has to be taken on reporting part. Now, in the course of doing the GST audit, auditor would make a lot of assumptions and safeguards. So these entire assumptions and safeguard, for example, a very basic assumption is that if the GST auditor is not a statutory auditor, a very basic assumption is made that the financial statements which are drawn are true and fair, and which is also signed by some other professional. So that reliance which the auditor is placing on the other professionals' work. So like that, various safeguards and assumptions which an auditor takes in the course of GST audit, auditor can mention if such assumption is important and can be, auditor feels that it is required that department must know about this information. It is important that auditor mentions the details of those assumptions in the part B, even if that assumption is not leading to liability straight away. On the other hand, if the auditor feels that that assumption is not required to be mentioned in the GST audit, it is nothing to do with the department knowing about that information, but more to auditors to safeguard themselves from the duty that is casted on them from by the department and the code of ethics laid down from the Institute of Chartered Accountants of India. From the documentation perspective, certainly auditors should get this thing in writing as a management representation from the assessee. Second and very important aspect is if something is wrong with the accounts or records or the documentation part of it. So when I say here accounts and records or documents is not the documentation of the auditor, but the documents which the assessee is required to maintain. For example, the self-invoicing which is to be done for the reverse charge transaction, refund voucher which is to be generated. The assessee needs to make sure that all his accounts records are maintained not just in the principal place of business, but also in all the other additional places of business and also the places where in the other states where he has the registration. Now, in the GST audit, especially in the part B, there is a special focus which is given on these accounts, records, and documents. Now, auditor, when he is doing the GST audit, he needs to verify whether all these accounts, records, documents are properly maintained. And if it is not so, then this has to very clearly form part of the comment in the part B. In fact, there is a table in which you can straight away select that this is the document not maintained and you need to report it. So this is a specific requirement which the department is asking, and this is where exactly it gets covered in other particulars as may be prescribed. Now, when the auditor is doing GST audit, there will be two sorts of scenarios. One is a matter which involves interpretation, and there are some matters which are very clear. There is no interpretation which is involved. Now, in case of a matter which involves interpretation, again there can be two scenarios where auditor that this is taxable and auditor is of the view that this is not taxable. For example, let us say ocean freight. Now in ocean freight is a matter which involves interpretation where there are divergent views which are happening. Now there is a Gujarat High Court judgment which says that there is no liability in case of ocean freight. Now auditor should read that judgment, have the knowledge about the position of the law which is happening, which is now getting developed more so from the various high courts and the advanced rulings that are being pronounced. So auditor must take a view, form a view in his opinion based on the facts which are there in the client's case, whether this particular case of interpretation would lead to liability or not. If auditor is of the opinion that it would lead to liability, then auditor must give the comment in part B that this liability is there, which has not been paid. But if auditor is convinced with the opinion that it is not taxable and it is not required to be paid, then auditor might as well decide not to report this particular aspect in the part B of the form. If that is the case, but auditor must make a judgment, very clear judgment. But certainly auditor, in case he is not able to make the judgment and if he feels that that amount of liability is substantial, then auditor can certainly look at taking a legal opinion from other experts and understanding the divergent views what is happening, how the industry is treating it, and accordingly considering the position of the law and the law in what is there, a view can be taken. Most importantly, the last scenario where apart from the liability, there is an interest which also is required to be paid. So very important, a lot of questions come is that whether auditor should also make sure that the assessee makes the payment of interest or interest penalties are not required to be paid. So again, when it comes to the taxability, auditor is required to duty bound to report even upon interest and penalties. So again, depending upon whether it is in the course of reconciliation or in the course of other than reconciliation matters, auditor can take a view where to report this. But even the aspect of interest and penalties, auditor needs to report, except in cases of general penalties where, due to some procedural non-compliances, a lot of general penalties which are being levied on the assessees, their auditor can take a view depending upon the facts of each case and based on his judgment and opinion. So this is very, very important that auditor puts various issues in these baskets and accordingly take a view whether it has to be reported, if reported, whether it has to be quantified, if not to be quantified, whether to be given in the part B as a specific comment or as a generalized comment, or not to give a comment, or whether to take it as a MRF. So all these are the various options or safeguards which the auditor is having, but he cannot use something where something else is required to be done. So this is very, very, very important aspect which you must know. Now, the last part is there is a book that we have written on Practical Guide to GST Audit and Certification. So this is published by Bloomsbury. So this book, we have tried to overhaul it completely. This is the 4th edition released in July 2020, wherein we have tried to add our practical experience in terms of detailed checklists, MRLs, formats, templates, internal control questionnaires, more specifically, the point-by-point auditor's checklist. For each and every point that has to be reported in GST 9 and 9C, what is that auditor has to check? What is that auditor need to do as a safeguard? there is a library of about 80 to 90 Part B comments that can arise in the course of GST audit, which auditor can look at reporting with a standardized comment and a library of management representation aspects which the auditor needs to consider while reporting this. So this book is available, which can be helpful for professionals doing the GST audit and also for industry who want to make sure that, on a preventive basis, they take care of the compliances. So with this, I would like to complete my presentation. Due to, we wanted to make it a small capsule of video. So I have given a broad overview of this entire thing. But yes, there can be a detailed thing. We will come out with more this kind of videos where in a small templates, we explain the GST audit, the critical aspects of GST audit. I would like to thank Madhukar sir for his session, which he has given in the first part of the discussion. And I would like to thank you all for patient listening. Thank you.